Welcome to Kitco News. I'm Niels Christensen. Shifting expectations around long-term interest rates is weighing on the US dollar, which is trading near a 2-year low. At the same time, it's also supporting gold prices. Here to talk about what we can expect for the rest of the year is Daniel Pavilonis, Senior Commodity Strategist at RJO Futures. Dan, we've talked a lot on the phone. This is your first time on the show. Welcome to Kitco News.
We do. Thank you. I love talking to you, and I love talking about gold. So I'm happy to be here.
Fantastic. Well, let's look at the market right now. We see this shift in interest rate expectations. We heard from Fed Chair Jerome Powell at Jackson Hole talking about this new shift in monetary policy, this 2% average for inflation now. What does this do for the precious metals, do you think, for the rest of the year?
I still think there's a lot of upside to the metals, but are we starting to go through kind of this quasi-rotation? Are we going to start to rotate out of, our fund managers going to start rotating out of some of the stocks that have been very popular during COVID and look at this period now as post-COVID? So if we go through post-COVID and the investment world has changed in a while, in a different way, and it's almost like a paradigm shift. So we're starting to see rising inflation. We're going in the next 2 months. We'll be going into the elections, and prior to this economic data that came out today and Jackson Hole, I was thinking the market was beginning to kind of pause, just trade sideways. Structurally, it looks great. I mean, we saw this sell-off down in the 50-day. We bounced in gold, same thing in silver, but it almost reminded me of like the NASDAQ selling off, hitting the 200-day and bouncing, and really just coiling up to move a lot higher. But what circumstances would be more advantageous for gold to move a lot higher? And I think inflation around 2%, I don't know if that's going to be it. I think we maybe have a slow grind higher. But if we start to see inflation where we can't get ahead of it and they're not raising interest rates and we actually have to step in and raise interest rates, you might start to see something of a Ricardian equivalence where the Fed or people that maybe decide on have to make a big purchase down the road, expecting interest rates to be higher, they pull spending forward. And a lot of people start to pull spending forward, and then you see a massive move in gold. So I'm looking at a couple of different scenarios, but really that's what I'm trying to focus on right now is, are we going to start to see inflation, and is it manageable inflation?
Mm-hmm. So what do you think then? I mean, we did we held $1,900 fairly well, during this consolidation period. Do you see gold prices sort of can they get above 2,000? Can they get to all-time highs, do you think, by the end of the year?
My original target was about 2,300 in gold. So I think as we're seeing it right now, pullbacks are being bought up. So I don't see us moving $100 a day, anything like that. But we may get days where we're moving $30, $40 on a big move to the upside. But ultimately, I think we grind higher.
Mm-hmm. You mentioned the election. I mean, we're November 3rd. Everybody goes to the polls. Probably one of the most anticipated elections in history, in recent history. I was talking to one analyst, and he said, what gold really wants right now is that fiscal and monetary stimulus. Any scenario that happens that puts that at risk, would hurt gold. So I'm sort of wondering, I mean, what are your thoughts if we get sort of the status quo in the election, a split Congress, we're already having trouble passing new stimulus measures. Is this the scenario that hurts gold?
So I think one scenario is we and looking back over the last couple of weeks, we're not getting the $1 trillion stimulus packages that we were getting before. Mm-hmm. So really, I think we're in this post-COVID environment. I think Munition was talking about maybe some kind of like a $500 billion deal or something like that. In fact, there's $150 billion left out of the PPP packages or the last package. So there's some stimulus there. Spending is obviously, if Republicans win again in Congress, they're going to tighten the belts a little bit on spending. And but conversely, I think if Democrats win the Congress or the presidency, I think they're going to go after higher taxes. So I think under either one of those scenarios, gold still should fare well. Historically, it's done well under conservative or very liberal spending, and I think it'll be a headwind, but I think some of the other upside opportunities, unfortunately, would be, some of the stuff that's going on with Turkey and Greece right now, China and India, the U.S. and China. I mean, there's some geopolitics there that can flare up and cause the metals to move higher also.
Okay. This has been a fantastic conversation. I wanted to get your thoughts on silver. We've started to see silver move, outperform gold. We've seen the gold-silver ratio fall back down to levels of April 2017. We saw gold hit an all-time high in early August. Does silver get there? Do we see silver going to all-time highs, or does it still remain, even though it outperforms, does it still remain in gold's shadow?
That's a good question. I mean, percentage-wise, silver moved, I think, about 60% so far this year. So it has been moving. I think in the last 2 months, it's probably the percentage gain, the biggest percentage gainer out of any commodity. Probably, I don't know, maybe not lumber, but yeah, maybe. So I think silver is playing catch up. I mean, we should be at 50 now, right? I mean, because gold's made all-time highs, but there's also this more industrial metal aspect to it that I think if we do start to see inflation and we start to see manufacturing build back up, then we should start to see silver move a lot higher. And I think it's just much easier if you're trading either one of those markets. If you're looking at upside potential, I think silver is a better buy right now. Silver seems really strong. It looked like it wanted to break out this morning. Gold, same thing, but not quite there yet. But it's last time we were trading at these levels in gold or lower than this, we were much higher in silver. So I think there's a story there that I think is easily tradable.
Oh, interesting. So how do you trade it then? I mean, do you buy the breakout, especially with gold? Do you buy the breakout or do you buy the dips? How would you play this market then?
So I think for a lot of clients, we've been long the metals for quite some time, and then it's more of a matter of just maybe collaring around. And everybody's different, but maybe just collaring around our futures positions and just trading when we see the opportunity, trading in and out of the collars. But ultimately, we want to stay long.
Mm-hmm. Mm-hmm. Dan, this has been a fantastic conversation. Thank you very much for your time, and we'll definitely be speaking to you again soon.
Thanks, Niels. Appreciate it.
Thank you for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.